For years, we've all been talking about the streaming wars as this epic battle for subscribers. But what if I told you that war is completely over and a whole new game has already started? Today, we're going to break down this massive shift in streaming and figure out how the game is actually played now. It's the question that's pretty much defined the last decade of media, right? Was it Netflix with its massive head start? Was it Disney with that incredible mountain of IP? Or maybe a dark horse, like Amazon? Well, here's the thing. The answer doesn't even matter anymore, because the entire industry has changed how it keeps score. The battle for your eyeballs, for your attention, it has entered a totally new era. That's right. The first thing you and I need to wrap our heads around is that the original streaming war, that relentless, cash-burning, all-out land grab for subscribers, it's officially a thing of the past. The entire goal has just flipped. For years, Wall Street, the media, everyone only cared about one thing: how many new subscribers did a service add this quarter? It was all about growth, growth, growth. But now, the only number that truly matters is the one with a dollar sign in front of it: profit. And listen, this isn't just some theory. The proof is right here in the profits. Netflix just posted a jaw-dropping $10.4 billion profit. Disney and Warner Bros. Discovery have both managed to flip their streaming divisions into the black. And even companies like Paramount and Peacock are slashing their losses like crazy. The message from the market couldn't be clearer. Show me the money. Okay, so that brings us to the next huge question. If subscriber growth isn't the main goal, how are they actually making this money? The playbook for monetization has had to completely change. You need to get familiar with this acronym, ARPU. It stands for average revenue per user. This is the new obsession for every media executive out there. See, it's not just about having you as a subscriber anymore. It's about how much money they can make from you specifically every single month, whether that's through price hikes, ads, or bundles. Now, what's really fascinating is where all this new money is coming from. If you look at SVOD, that's your classic subscription service, like an ad-free Netflix plan, it's growing at a solid, 9 to 11%. But the real explosion, it's in the ad-supported models. AVOD, which is ad-supported video on demand, and FAST, free ad-supported TV, they are just blowing up, projected to grow by almost 30%. I mean, just look at this when you put them side by side. The difference is staggering. Advertising isn't some side hustle anymore. For a lot of these companies, it has become the main engine of growth for the entire industry. And this huge pivot towards ads and these new models, it's all happening because of a massive shift in how we all watch TV. In fact, just this year, we crossed a threshold that really marks the end of an era for traditional television. For the very first time ever, streaming viewership at almost 45% was bigger than cable and broadcast TV combined. This isn't just a trend anymore, folks. It is a complete and total transfer of power. The audience has moved, and you can bet the ad dollars are moving right along with them. Now, the second big strategy is, well, it's kind of ironic, isn't it? After we all spent years cutting the cord to get away from that big, expensive cable bundle, the streaming industry is now working overtime to basically recreate it. And there's a really simple reason why. It's all about churn. That's the industry term for when you cancel a service, and it's the absolute enemy of profitability. But the data shows that when services are bundled together, we are 42% less likely to cancel. It just makes the whole thing feel stickier, more essential to our entertainment lineup. So we know the business model has totally changed, but what does that mean for the actual shows and movies we watch? Well, content is still king, but let's just say the king has a brand new playbook. The whole peak TV era where services would just throw billions of dollars at hundreds of shows to see what might stick, that's over. Now it's all about return on investment, or ROI. That means focusing on huge, bankable IP. Think Marvel or Star Wars. It means using must-see live sports to keep you from canceling. And it means building entire universes from a single hit, like what Netflix is trying to do with Squid Game. It's about quality and franchise potential, not just sheer quantity. All right, so now that we know the new rules of the game, it's about profitability, ARPU, ads, bundles, and way smarter content, let's actually pull out the scorecard and see how the biggest players are stacking up. First up, of course, is Netflix. After pretty much inventing the first era of streaming, they've successfully navigated this massive shift to become the new benchmark for profitability. And honestly, the numbers just speak for themselves. With over 300 million subscribers, they're not just the biggest, they're an absolute profit machine, pulling in almost $4 billion in operating income in just one quarter. And they command a massive 21% of all TV viewing time in the US. That's scale and engagement.
The main challenger, no surprise here, is Disney. Their entire strategy is built on a foundation that literally no one else on Earth can match. That world-famous, unbeatable library of intellectual property. And they are definitely making it work. They've hit profitability, and get this, with Hulu now fully integrated, their combined viewership share in the US is actually higher than Netflix's at 23%. They're proving that leveraging those beloved brands is a very powerful way to build a sustainable business. Okay, so we've looked at the huge industry shifts. We've looked at the major players. But let's bring it all home. What does any of this mean for your wallet and for your watch list?
It really comes down to three things you are probably already noticing. First, you're seeing ads everywhere because it lets companies make more money while also giving you a cheaper option to sign up. Second, bundles are becoming the standard because, like we said, they make you way less likely to cancel. And finally, yeah, those price hikes are here to stay. With subscriber growth slowing down, raising the price on all of us is the most direct path for these companies to boost that all-important ARPU number and keep their investors happy.
So as we leave the old streaming wars in the rearview mirror, the new battle for your loyalty is really being fought on these three different fronts. It is no longer just about having that one buzzy hit show. It's about this complex calculation of content, price, and convenience. The game has changed, and every single player is now being forced to prove not just that they can grow, but that they can actually last.